What is alternative financing and what is its origin?
A new term has been developed in the last decade, which refers to, or which is commonly known as alternative finance. That's the word that's been used and coined for this industry, which is providing, again, finance and funding, but beyond and outside the traditional method. The traditional method has always been, a person who needs finance. Traditionally, what does he do? He'd always go to a bank. That was the place known for providing funds. But then what's happened is in the last decade, there's been a boom and a rapid growth of financing providers which are beyond banks. Okay, so it will be, when we talk about alternative finance, it will not be a bank providing the finance. It'll be another business, it'll be another company. It's a non-bank funding, usually small to medium enterprises, small to medium organizations, individuals, maybe some group of people, and so on and so forth. So alternative finance refers to a system which is developed whereby financing is issued by non-bank lenders. And within this scope, there are a number of ways which these non-bank lenders can deploy financing. And that's really how it differs from the traditional way, whereby traditionally you would have this bank. Now, alternative finance refers to really this technological based. Remember, that's really key here in understanding that what's a driver for this, what's driving alternative finance is technology, which is allowed to minimize cost, is allowed to open up more avenues and channels. It's allowed to reduce transactional costs. It's increased market efficiency and allowed to connect, you could say, lenders and borrowers together. Whereas through a bank, although a bank uses, a traditional conventional bank would be using the deposits and leveraging those on its asset side, in a alternative finance, what happens is you have a platform, and this platform is connecting investors and borrowers. There's much more transparency. There's much more, you could say, the investors would more likely know who the borrower is. That's the key up here. So you're reducing the intermediate, it's disintermediation. You're reducing the intermediary. It's being fragmented. And so we're removing the intermediary, therefore costs are decreasing. And because of technology, you can now have a seamless experience on a platform and experience receiving and also investing. So you can receive both or experience both sides of the spectrum when it comes to alternative finance.
Islamic finance learning made simple and memorable.